Booyah! Unmasking the titans of finance. Have you ever wondered what investment bankers really do? Are they just stock market pros in suits? Or the brains behind billion-dollar deals? Let me tell you, folks, it's a question I get all the time. People see the skyscrapers, they hear the astronomical figures, and they think, Kramer, what in the name of Benjamin Graham is going on in there? Are these folks just pushing paper, or are they the puppet masters of the global economy? The mystery ends today, because we're pulling back the curtain and you're gonna get the straight scoop, no chaser. The truth is, investment banking is one of the most powerful and high-stakes areas in finance. Today, let's break down what investment banking really is, how it works, and why it matters. This isn't just about numbers on a screen, people. This is about the lifeblood of capitalism, the engine that drives innovation, growth, and yes, sometimes, some serious, earth-shattering deals that change the way we live. We're talking about the big leagues, the financial gladiators who make things happen. If you've ever wanted to understand who's really pulling the levers behind the curtain of big business, you've come to the right place. So buckle up, because Aniket Asrani06 and yours truly are about to take you on a whirlwind tour. We're gonna dissect this beast piece by piece, so you understand every angle, every play, every home run. No more confusion, no more intimidation. By the end of this, you'll be talking the talk and walking the walk. Are you ready to get smart? Are you ready to make some noise? Then let's go! Booyah! Alright, let's get down to brass tacks. What is investment banking? Forget your local savings and loan, folks. We're not talking about piggy banks and car loans here. Investment banking at its core is all about one thing: big money. And helping massive organizations. I'm talking corporations bigger than your hometown, governments, giant institutions, raise that capital. They are the financial architects, the master builders of corporate finance. They don't just count the money, they conjure it, they structure it, they make it work for these colossal entities. It's high finance, high stakes, and high reward. Think about it. A company wants to build a new factory, launch a revolutionary product, or even buy another company. Where does that mountain of cash come from? It doesn't grow on trees, even for the big boys. That's where the investment bankers step in like financial superheroes. They connect the companies that need money with the investors who have money. They are the matchmakers of the financial world, orchestrating deals that can reshape entire industries. It's not just about lending, it's about creating financial solutions, sometimes out of thin air. And when I say complex financial transactions, I mean complex. This isn't your grandma's Sudoku puzzle. We're talking about intricate webs of finance, law, and strategy. Mergers that combine two giants into one behemoth. Acquisitions where one company swallows another whole. So, we know they deal with big money and big companies, but what are the actual plays in their playbook? What services are they slinging day in and day out? Let's break down the 5 key services these financial titans offer. You gotta know the services if you want to understand the game. This isn't just random wizardry, it's a set of specialized skills, honed to perfection, designed to make money and move markets. Listen up, because this is where the rubber meets the road. First up, the big one, capital raising. This is the bread and butter, folks. Companies need cash to grow, to innovate, to conquer. Investment banks help them get it. How? By issuing stocks, that's equity, ownership in the company. Or by issuing bonds, that's debt, an IOU from the company. The bankers figure out the best way, the cheapest way, the smartest way for a company to tap into the financial markets and get the fuel it needs. They underwrite these securities, meaning they often buy them from the company and then sell them to investors, taking on the risk. That's guts, people. Next on the list, the one that gets all the headlines, mergers and acquisitions, M&A. This is where companies combine or one buys out another. Think of it as corporate marriage counseling or sometimes a corporate duel to the death. Investment bankers are the advisors. They help companies identify targets for acquisition or find potential buyers if they want to sell. Alright, so we know what they do. Now let's talk about who does it. An investment bank isn't just one giant room full of people yelling, buy, sell. No. It's a highly structured organization, a well-oiled machine with specialized divisions, each a powerhouse in its own right. Each function we just talked about, it has its own army, its own generals, its own battle plans. Knowing these divisions is like knowing the positions on a championship team. First up, you've got the Corporate Finance M&A Advisory Division. These are the deal makers, the strategists, the guys and gals who are whispering in the CEO's ear. When a company wants to buy another or sell itself or figure out how to finance a massive project, these are the folks they call. They build the financial models, they craft the pitch books, they negotiate the terms. They are the architects of those headline-grabbing mergers and acquisitions. Think of them as the quarterbacks, calling the plays that change the game. Then there's equity capital markets, ECM. Remember when we talked about companies issuing stock, going public with an IPO? That's the ECM team's domain. These are the IPO specialists, the stock issuance gurus. They work with companies to structure their equity offerings, they manage the underwriting process, they take the company on roadshows to meet potential investors, and they help price the stock. When you see a company ring that opening bell on the stock exchange, the ECM team is usually right there cheering them on. They turn private dreams into public companies. Booyah! And if there's equity capital markets, you better believe there's debt capital markets, DCM. Not every company wants to issue stock. Sometimes borrowing money by issuing bonds is the smarter play. The DCM division handles this. They help companies and governments raise money by selling bonds to investors. They advise on the type of bonds, the interest rates, the maturity dates. Alright, let's get into the nitty-gritty. How does one of these colossal, earth-shattering investment banking deals actually come to life? It's not like they just snap their fingers and bam, $1 billion appears. No sir, it's a process, a grueling, meticulous, high-stakes marathon. Let me walk you through the typical life cycle of a deal. This is where the magic happens. But it's a magic born of hard work, sharp minds, and nerves of steel. It all starts with pitching the deal. Investment bankers are always on the hunt for business. They're constantly meeting with companies, understanding their strategic goals, and then coming back with ideas. Hey, Mr. CEO, have you thought about buying your competitor? Or Miss CFO? Now is the perfect time for your IPO. They create elaborate presentations called pitch books, filled with analysis, valuations, and strategic rationales. This is salesmanship at the highest level, convincing a company that the bank has the best ideas and the best team to execute them. It's a battle for the mandate. Once the bank wins the mandate, bingo! The real work begins with due diligence. This is the deep dive, the forensic investigation. The bankers, along with lawyers and accountants, scrutinize every aspect of the company or companies involved. Financial statements, contracts, customers, management operations, everything is put under the microscope. They need to uncover any hidden risks, any skeletons in the closet before committing billions of dollars. This is painstaking, often tedious work, but absolutely critical. One missed detail can blow up the entire deal. No stone left unturned. Next up, valuation. Alright, if you're gonna understand the world of investment banking, you gotta speak the language. These folks have their own lingo, their own shorthand. It can sound like Greek to an outsider, but once you crack the code, you're in the know. So, let's arm you with some must-know terms from the IB trenches. Aniket Asrani06 wants you to be smart, and so do I. So listen up, take notes, because this is your Rosetta Stone for Wall Street. First up, the rock star of financial terms, IPO, or initial public offering. We've touched on this, but let's nail it down. This is when a private company, one whose shares are held by a few founders and early investors, decides to sell shares to the general public for the very first time. It becomes a publicly traded company, listed on a stock exchange like the NYSE or NASDAQ. It's a huge step, a coming-of-age party for a company, and a way to raise a boatload of cash. Think of it as a debutante ball for corporations. Next, underwriting. This is a core function, especially in capital raising. When a bank underwrites an offering of stocks or bonds, it typically buys the securities from the issuing company at an agreed price and then resells them to investors. The bank takes on the risk that it might not be able to sell all the securities, or that the price might fall. It's like being an insurance policy for the company raising capital. The fee they earn for this, that's the underwriter's spread. Gutsy, I tell ya. Then there's the pitch book. The legendary pitch book. This is the glossy, data-packed presentation that investment bankers create to win business. It's their sales document, their calling card. It will contain analysis of the client's company, industry trends, potential strategic options, like an acquisition or an IPO, valuations, and why their bank is the best one for the job. So, you've heard all about the deals, the divisions, the lingo, and maybe, just maybe, a little voice inside you is saying, hey, I could do that. I want a piece of that action. Well, hold your horses, bucko. A career in investment banking is not for the faint of heart. It's intense, it's demanding, but yes, it can be incredibly rewarding both intellectually and financially. Let's look at the typical career path and what it takes to survive and thrive in this Shark Tank. The journey usually starts at the analyst level. These are typically fresh-faced graduates plucked from the top universities ready to conquer the world. And what do? They work. We're talking grunt work, building those financial models in Excel until their eyes bleed, crafting those pitch books slide by slide, doing the research, checking the numbers. The hours are brutal. 80, 90, even 100 hours a week is not uncommon. It's a 2 to 3 year trial by fire. Many burn out, but those who survive learn an incredible amount, incredibly fast. If you make it through the analyst program, you might get promoted to associate, or you could come in at this level if you have an MBA from a top business school. Associates have more responsibility, they manage the analysts, they have more client interaction, they take a bigger role in deal execution and idea generation. The hours are still long, very long, but the work becomes more strategic, more engaging. You're starting to see the bigger picture, not just the individual spreadsheets. You're learning to be a banker, not just a number cruncher. Climb further up the ladder and you reach vice president, VP, or sometimes director. Titles can vary by bank. At this stage, you're a seasoned pro. We've been deep in the weeds, folks, looking at the nuts and bolts of investment banking. Now let's pull back, look at the forest, not just the trees. From taking those game-changing startups public, giving them the fuel to become household names, to advising on those colossal billion-dollar mergers that reshape entire industries, there's no denying it. Investment banks are shapers, movers of the financial world. They are the architects of economic evolution, the facilitators of ambition on a grand scale. Think about the impact. When a company goes public via an IPO orchestrated by an investment bank, it's not just about the founders getting rich. It's about creating jobs, funding innovation, and giving everyday investors a chance to participate in growth. When two companies merge, guided by their bankers, it can lead to greater efficiency, stronger global competitors, and new products and services. These aren't just abstract financial maneuvers, they have real-world consequences, rippling through the economy in ways you might not even realize. But the world doesn't stand still, and neither does finance. The game is changing, people. We've got fintech companies nipping at the heels of traditional banks, using technology to offer financial services faster, cheaper, and sometimes even better. Think digital payments, robo-advisors, blockchain. These disruptors are forcing the old guard to adapt, to innovate, or risk becoming dinosaurs. Investment banks are responding by investing in tech, acquiring fintech startups, and trying to integrate these new tools into their own operations. Then there's the rise of AI, artificial intelligence. This is a game changer, potentially. AI can be used to analyze vast amounts of data for research, to identify trading patterns, to automate due diligence, even to help structure deals. The machines are getting smarter, and banks are exploring how to leverage this power to gain an edge, to improve efficiency, and to serve clients in new ways. The human element will always be crucial for relationships and judgment, but AI is becoming an indispensable co-pilot. And let's not forget ESG, environmental, social, and governance factors. Woo! We covered a ton of ground today, didn't we? From the core functions of these financial behemoths, to the nitty-gritty of deal-making and the lingo you need to know. Investment banking isn't some impenetrable fortress of mystery anymore, is it? You now have the inside scoop, the Kramer-Aniket Azrani 06 special report on what makes this critical part of the financial world tick. Knowledge is power, folks, and you just got a whole lot more powerful. Remember, these institutions are the engines of capitalism, for better or worse. They channel investment, they advise on transformative deals, and they provide the liquidity that keeps markets moving. It's a complex, demanding, and often controversial field, but it's undeniably central to the global economy. Whether you're an aspiring banker, an investor, or just a curious citizen, understanding this world is crucial. So take what you learned today and use it. Don't just sit on it. If you found this useful, hit like, subscribe, and let us know which topic we should explore next. Aniket Azrani 06 and we're here to help you navigate the wild world of finance. Don't be a bear on your own education, be a bull. Keep learning, keep questioning, and keep striving to understand how money makes the world go round. Until next time, stay informed, stay engaged, and booyah!